Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has tumbled now for 4 out of 5 days since posting a bearish outside range day late last week. And from there, now it looks to a trajectory of 66.80, which is around this region here that found support back in early July. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, refreshed its 20-year high after surging to 109.95 on Thursday after the US manufacturing data came out, has the previous month of 52.8. In other data, on Wednesday, the US private payroll job growth slowed in August, according to the ADP National Employment Report. Companies added just 132,000 jobs last month, sharply missing the forecast of 300,000 gain. Looking to this Friday, the August US non-farm payrolls report will take center stage, with the economists forecasting or expecting a 295,000 jobs added and the unemployment rate to hold steady around 3.5%. In July, the US added 528,000 jobs while the unemployment rate dipped to 3.5. So as I mentioned before, looking at the Australian dollar, I am looking for a down test towards that 68.80 area, and the market would need to sustain further gains, but it's got a long climb ahead of itself and get above the region of 68.65, which, if I just bring that up a little bit, is where the market would reinstate the bullishness and therefore look towards further gains to around 69.15. Well, overnight, the US dollar flexed its bullish muscles. The euro took a tumble quite heavily and crushed the level around 99.50 area. And from there, the market is now looking for at least try to reclaim some of its losses before the non-farm payrolls number, which is scheduled later this evening. Looking at the current pattern, I feel the market is still somewhat mixed. At present, I'm not going to rule out any bullish call as of yet, because I still feel there is a little bit more potential when it comes to the euro to gain its momentum. And if so, recapturing the top side around 99.85 as minor, then push on towards the parity area or retest the highs of the previous call at 100.70.75. Now, with that being said, if the market does close under 98.80, the call is down towards 96 as a potential target. Looking at dollar yen, well, the market has rallied further and now posts a fresh 1998 high or low for the Japanese yen. And this was the last time we saw the market back for the weakness of the Japanese yen, as the Bank of Japan and the US Federal Reserve is expected to widen further its monetary policy gap, that is. Thursday's rally weakened this yen's value as the dollar rallied quite aggressively and breaks above 140 for the first time, as I mentioned, August 1998. And along with that, the Bank of Japan governor has vowed to keep monetary policy ultra loose, saying that the external factors driving domestic inflation higher will ease next year. Still, with the dollar refreshing its highs around 109.95, the market is still looking for a challenge for dollar yen to 141 and reassess from there, but we are extremely overbought. Looking at sterling, well, the market's sort of floating around this level of 115.45, not quite broken down as of yet. Now, looking into tonight, if we see a New York close tomorrow morning, more to the fact, of under 115.45, that could give further risk to the downside and expose the region of 111 to 113. The trend is still somewhat quite strong to the bear case, but we are oversold. If we do get a rejection from 115.45, which I am sort of feeling that we may, then that would see a move up. But we need to clear 116.65, which is around this level here, to support or at least reinstate a positive bias towards 118.60.80 area. The bearishness for gold nearly claimed its target of 1,680 overnight, but at the moment the market is a little bit oversold and fine in some respects here. As previously seen in July, the market staged a very aggressive rebound from this region, so keep an eye on this pattern as we are looking vulnerable to the downside, but still, nevertheless, depends on the dollar. If it closes under 109, as it's trading around 109.50, depending on how the non-farm payrolls, as if the market may find, or should I say, if the non-farm payrolls report impresses traders, then I do expect to see further US dollar strength, and that is head towards 111, and that would see gold take out the level of 1,680 and maybe even look down to 1,635. It really depends into tonight and how the dollar closes at the end of the week. Finishing up with oil, well, today saw a very strong rebound of $86 a barrel, and from there we're looking up towards that 88.70 as a potential target, or around that 70.90 area. And if we see a break above there, then we could see further gains beyond 88.70.90 on to re-challenge the highs around 91.30.40. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.